Welcome to our deep dive into the world of cross-border transactions. In today's globalized economy, businesses and individuals are increasingly engaging in financial exchanges that cross national boundaries. But what exactly are cross-border transactions? Essentially, these are payments or transfers of funds that occur between parties located in different countries. Whether you're buying goods from an overseas supplier, sending money to family abroad, or investing in foreign markets, cross-border transactions are at the heart of international commerce. In this video, we'll explore how these transactions work, the challenges involved, and the innovations shaping their future. Let's get started by understanding the basics. Cross-border transactions refer to any financial activity where the payer and the recipient are based in different countries. This can include everything from purchasing products online from an international retailer to large-scale business investments across continents. The process involves converting one currency into another, navigating different banking systems, and complying with various regulations. These transactions are essential for global trade, enabling businesses to expand their markets and consumers to access a wider range of products and services. Understanding the definition is the first step to grasping the complexities involved. Cross-border payments play a crucial role in the global economy. They allow businesses to source materials from different countries, pay international employees, and reach customers worldwide. For individuals, these transactions make it possible to send remittances to family members or pay for services abroad. The ability to move money across borders efficiently and securely is vital for economic growth and international cooperation. As global trade continues to expand, the demand for seamless cross-border payments only increases, making this topic more relevant than ever. At its core, a cross-border transaction involves transferring money from one country to another. This process typically starts with the sender initiating a payment through a bank or payment service provider. The funds are then converted into the recipient's local currency, often passing through several intermediary banks before reaching the final destination. Each step involves fees, exchange rates, and compliance checks. The entire process can take anywhere from a few minutes to several days, depending on the countries and financial institutions involved. Several entities are involved in making cross-border transactions possible. These include banks, payment processors, currency exchange services, and regulatory bodies. Banks act as intermediaries, moving funds between accounts in different countries. Payment processors like PayPal or Stripe facilitate online payments, while currency exchange services handle the conversion of one currency to another. Regulatory bodies ensure that all transactions comply with international laws and anti-money laundering regulations. Each player has a unique role in ensuring the smooth flow of funds across borders. One of the most important aspects of cross-border transactions is currency conversion. When money moves from one country to another, it often needs to be exchanged from the sender's currency to the recipient. This process is handled by banks or currency exchange services, which set the exchange rate based on market conditions. Currency conversion can add costs to the transaction, as financial institutions typically charge a fee or margin on the exchange rate. Understanding how currency conversion works helps you anticipate the true cost of sending money internationally. Exchange rates play a significant role in cross-border transactions. These rates determine how much of one currency you get in exchange for another. Exchange rates fluctuate constantly due to factors like economic conditions, political events, and market demand. Even small changes in the rate can have a big impact on the final amount received by the recipient. For businesses dealing with large sums, managing exchange rate risk is a critical part of international finance. Individuals should also be aware of how rates affect their transfers. Every cross-border transaction comes with costs. These can include transfer fees charged by banks or payment providers, currency conversion fees, and sometimes hidden charges. The total cost can vary widely depending on the method used, the countries involved, and the amount being sent. It's important to compare different providers and understand their fee structures before making a transfer. By being aware of all potential costs, you can choose the most cost-effective way to send money internationally. Speed of cross-border payments can vary greatly. Traditional bank transfers may take several days, especially if multiple intermediaries are involved. However, new technologies and fintech companies are making it possible to send money across borders in minutes or even seconds. Factors that affect speed include the countries involved, the payment method, and the time of day. Faster payments are especially important for businesses that need to pay suppliers quickly or for individuals sending emergency funds. Security is a top concern when sending money internationally. Cross-border transactions are subject to strict regulations and monitoring to prevent fraud, money laundering, and terrorist financing. Banks and payment providers use advanced encryption and authentication methods to protect your funds and personal information. It's important to use reputable providers and be cautious of scams. Always verify the recipient's details and keep records of your transactions for added security. Cross-border transactions must comply with a range of international regulations. These include anti-money laundering, AML laws, know your customer KYC requirements, and sanctions screening. Financial institutions are required to verify the identity of their customers and monitor transactions for suspicious activity. Compliance helps prevent illegal activities and ensures the integrity of the global financial system. For businesses, staying compliant can be complex, but it's essential for operating internationally. Despite their importance, cross-border transactions come with several challenges. These include high fees, slow processing times, complex regulations, and the risk of fraud. Currency fluctuations can also impact the value of transfers. For businesses, managing these challenges requires careful planning and the use of reliable partners. individuals should be aware of potential pitfalls and take steps to protect themselves. Overcoming these challenges is key to making the most of international payments. Technology is transforming cross-border transactions. Innovations like blockchain, artificial intelligence, and real-time payment systems are making international transfers faster, cheaper, and more secure. Fintech companies are challenging traditional banks by offering user-friendly platforms and lower fees. As technology continues to evolve, we can expect even more improvements in the way money moves across borders. Staying informed about these trends can help you take advantage of new opportunities. Blockchain technology and cryptocurrencies like Bitcoin are revolutionizing cross-border payments. Blockchain enables secure, transparent, and near-instant transfers without the need for intermediaries. Cryptocurrencies can be sent directly from one person to another, bypassing traditional banking systems. This can reduce costs and increase speed, but it also introduces new risks and regulatory challenges. As adoption grows, blockchain could play a major role in the future of international finance. Mobile payment apps are making it easier than ever to send money across borders. Services like PayPal, Wise, and Revolut allow users to transfer funds internationally using their smartphones. These apps often offer better exchange rates and lower fees than traditional banks. They also provide real-time tracking and notifications, giving users greater control and transparency. As mobile technology becomes more widespread, cross-border payments are becoming more accessible to everyone. Remittances are a major form of cross-border transactions, especially for families in developing countries. Millions of people work abroad and send money home to support their loved ones. These funds are vital for education, healthcare, and daily living expenses. Remittance flows are often more stable than other types of international capital, providing a reliable source of income for many households. Improving the efficiency and affordability of remittances can have a significant impact on global development. Businesses frequently engage in cross-border transactions to pay suppliers, purchase inventory, or invest in foreign markets. These transactions can be complex, involving large sums, multiple currencies, and strict regulatory requirements. Companies must manage risks related to exchange rates, compliance, and payment delays. Using specialized payment solutions and working with trusted partners can help businesses streamline their international operations and reduce costs. Commerce has made cross-border transactions a part of everyday life. Online shoppers can purchase products from retailers around the world with just a few clicks. Payment gateways handle the currency conversion and ensure secure transactions. For businesses, selling internationally opens up new markets and revenue streams. However, they must also navigate challenges like shipping, taxes, and local regulations. E-commerce continues to drive growth in cross-border payment. Investing across borders is another key driver of cross-border transactions. Individuals and institutions invest in foreign stocks, bonds, real estate, and businesses. These investments require moving large sums of money internationally and often involve complex regulatory and tax considerations. Investors must also manage currency risk and stay informed about market conditions in different countries. International investments can offer diversification and growth opportunities, but they also come with unique challenges. Peer-to-peer P2P transfer platforms are changing the way people send money internationally. These services connect individuals directly, often at lower costs than traditional banks. P2P platforms use technology to match senders and recipients, sometimes even allowing for local currency exchanges. This makes sending money abroad faster, cheaper, and more convenient. As P2P services grow, they are becoming an important part of the cross-border payment ecosystem. SWIFT network is a critical infrastructure for cross-border payments. SWIFT stands for Society for Worldwide Interbank Financial Telecommunication. It enables banks around the world to communicate securely and process international transactions. While SWIFT does not move money itself, it provides the messaging system that coordinates transfers between financial institutions. Most traditional cross-border payments rely on SWIFT, making it a backbone of the global financial system. Correspondent banking is another key component of cross-border transactions. In this system, banks maintain accounts with each other to facilitate international payments. When you send money abroad, your bank may use a network of correspondent banks to move the funds to the recipient's bank. This process can add time and cost to transactions, but it is essential for connecting banks in different countries. Recent innovations are aiming to make correspondent banking more efficient. Anti-money laundering, AML measures are critical in cross-border transactions. Financial institutions must monitor transactions for suspicious activity and report any concerns to authorities. AML regulations help prevent illegal activities like money laundering, terrorist financing, and fraud. Compliance with these measures is mandatory and can add complexity to international payments. However, they are essential for maintaining trust and security in the global financial system. Know Your Customer, or KYC, is a process used by financial institutions to verify the identity of their clients. This is especially important in cross-border transactions, where the risk of fraud and money laundering is higher. KYC procedures may include collecting identification documents, proof of address, and information about the source of funds. While KYC adds an extra step to the process, it helps protect both the sender and the recipient from financial crime. International sanctions and restrictions can impact cross-border transactions. Some countries or individuals may be subject to sanctions that prohibit or limit financial activity. Banks and payment providers must screen transactions to ensure they do not violate these restrictions. Failing to comply with sanctions can result in severe penalties. It's important for both businesses and individuals to be aware of any relevant restrictions before sending money internationally. Emerging markets are playing a growing role in cross-border transactions. As economies in Asia, Africa, and Latin America expand, more businesses and individuals are participating in international trade and finance. These markets present new opportunities but also unique challenges, such as less developed financial infrastructure and higher regulatory risks. Understanding the dynamics of emerging markets is crucial for anyone involved in global payment. COVID-19 pandemic has had a significant impact on cross-border transactions. Lockdowns and travel restrictions disrupted global trade and reduced the volume of international payments. At the same time, the shift to digital platforms accelerated the adoption of online payment solutions. Many businesses and individuals turned to fintech services to send and receive money safely. The pandemic highlighted the importance of resilient and flexible payment systems in times of crisis. Future of cross-border payments is being shaped by technology, regulation, and changing consumer expectations. We can expect faster, cheaper, and more transparent transactions as fintech innovation continues. Central bank digital currencies, CBDCs, and new payment networks may further transform the landscape. Regulatory harmonization and increased competition will benefit consumers and businesses alike. Staying ahead of these trends is key to success in the global economy. Central bank digital currencies, or CBDCs, are digital forms of national currencies issued by central banks. CBDCs have the potential to make cross-border payments faster, cheaper, and more secure. Several countries are piloting or developing their own digital currencies. CBDCs could reduce reliance on intermediaries and improve transparency. However, they also raise questions about privacy, security, and the role of traditional banks. The development of CBDCs is a trend to watch closely. Open banking and application programming interfaces, APIs, are enabling new ways to move money across borders. Open banking allows customers to share their financial data securely with third-party providers, leading to more personalized and efficient services. APIs make it easier for different financial systems to communicate and process payments. These innovations are increasing competition and driving down costs in the cross-border payment industry. Artificial intelligence, AI, is being used to improve cross-border transactions in several ways. AI can detect fraudulent activity, optimize currency conversion, and automate compliance checks. Machine learning algorithms analyze vast amounts of data to identify patterns and make real-time decisions. By leveraging AI, financial institutions can offer faster, safer, and more personalized services to their customers. The use of AI is set to grow as technology advances. Transparency is becoming increasingly important in cross-border transactions. Customers want to know where their money is at every stage of the process. Modern payment platforms offer real-time tracking and notifications, giving users greater visibility and control. Transparency also helps build trust and reduces the risk of errors or fraud. As expectations rise, providers are investing in better tracking systems and clearer communication. Positive customer experience is essential for success in cross-border payments. Users expect fast, easy, and affordable transfers with clear communication and support. Providers are focusing on user-friendly interfaces, responsive customer service, and transparent pricing. By prioritizing the customer experience, companies can build loyalty and stand out in a competitive market. Satisfied customers are more likely to use and recommend a service. Fraud prevention is a major focus for cross-border payment providers. Advanced security measures, such as two-factor authentication and real-time monitoring, help protect users from scams and unauthorized transactions. Providers also educate customers about common fraud tactics and encourage safe practices. Staying vigilant and using secure platforms are the best ways to prevent fraud when sending money internationally. Governments play a significant role in shaping the cross-border payments landscape. They set regulations, enforce compliance, and negotiate international agreements. Government policies can impact everything from exchange rates to transaction fees. Collaboration between governments, financial institutions, and technology providers is essential for creating a secure and efficient global payment system. Understanding the role of government helps explain why rules and processes vary between countries. There are many solutions available for cross-border payments, each with its own advantages and disadvantages. Traditional banks, fintech companies, money transfer operators, and cryptocurrency platforms all offer different services. The best solution depends on factors like speed, cost, convenience, and security. Comparing options and understanding your needs will help you choose the right provider for your international transaction. Selecting the right provider for cross-border transactions is crucial. Factors to consider include fees, exchange rates, speed, security, and customer support. Some providers specialize in certain regions or types of transfers. Reading reviews, comparing services, and understanding the terms and conditions can help you make an informed decision. The right provider can save you money and ensure a smooth transaction experience. Proper documentation is important for cross-border transactions. Keeping records of transfers, receipts, and communication can help resolve disputes and ensure compliance with regulations. Businesses may need to provide documentation for tax or audit purposes. Individuals should also keep track of their transactions for personal reference. Good record keeping is a simple but effective way to protect yourself and your finances. Cross-border transactions can have tax implications for both individuals and businesses. Different countries have different tax laws, and international transfers may be subject to reporting requirements or withholding taxes. It's important to understand the tax rules in both the sending and receiving countries. Consulting with a tax professional can help you avoid surprises and ensure compliance with all relevant regulations. Paying employees in different countries is a common challenge for global businesses. Cross-border payroll involves managing multiple currencies, tax systems, and labor laws. Specialized payroll providers can help companies navigate these complexities and ensure employees are paid accurately and on time. Efficient payroll systems are essential for attracting and retaining international talent. International students often need to make cross-border payments for tuition, housing, and living expenses. These transactions can be complicated by currency conversion, fees, and documentation requirements. Many universities partner with payment providers to offer secure and affordable solutions. Understanding the options available can help students and their families save money and avoid delays. Travelers often make cross-border payments for hotels, transportation, and activities. Using credit cards, travel money cards, or mobile payment apps can make spending abroad easier and more secure. It's important to be aware of foreign transaction fees and exchange rates. Planning ahead and choosing the right payment methods can help travelers save money and enjoy a smoother trip. Charitable organizations often receive donations from supporters in other countries. Cross-border donations can be affected by fees, currency conversion, and regulatory requirements. Many charities use specialized platforms to make international giving easier and more transparent. Donors should research the best ways to give and ensure their contributions reach the intended recipients efficiently. Environmental impact of cross-border transactions is becoming a topic of interest. Digital payments reduce the need for paper and physical transport, but the energy consumption of data centers and blockchain networks can be significant. Some providers are investing in green technologies and carbon offset programs. As sustainability becomes a priority, the industry is exploring ways to minimize its environmental footprint. Cross-border transactions are an essential part of our interconnected world. As technology advances and regulations evolve, sending money internationally is becoming faster, safer, and more accessible. Whether you're a business, an individual, or a nonprofit, understanding the ins and outs of cross-border payments can help you make smarter financial decisions. The future promises even greater innovation and opportunity in global finance. Thank you for joining us on this journey through the world of cross-border transactions.